Today we'll be going over the week 43 portfolio update since I started living out of my Robinhood brokerage account and investing 100% of my paycheck at the end of May 2025 last year. It's an exciting one as I received my final tax return from my tax preparer this week, and I will owe no taxes on the $52K of dividends I made last year, in large part from my high yield ETFs. I'll go on to all the details of the refund as well as the usual portfolio updates, breaking down my performance this week, dividends received, etc. As usual, you'll get radical transparency on this channel. You'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, give a like and subscribe to keep the channel going. Before we get started, as usual, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. And yeah, as a refresher, we'll just kind of go over my monthly flowchart here briefly. Yeah, this is the fully invested flowchart, layoff edition. I invest 100% of my income on this channel. Previously, I invest at least 10.8K a month, but now it's closer to $1,152 every week with unemployment income until I start my new job in a couple of weeks. I invested normally into growth and high yield ETFs, but with the layoff, I'll be focusing on safer high yield ETFs for now to keep my monthly cash flow growing. So think SPY, QQQI, TSPY, TDAC. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and my monthly bills. The goal is to ideally never sell a share to take money out of the account, apart from when I'm rebalancing like I did the other week. I want to forever compound my growth and high yield assets and eventually have my monthly dividends exceed my monthly expenses. For an in-depth breakdown video of the old chart that I'll eventually roughly get back to with my new job, check out the link at the top right. And yeah, let's just get started. So first things first, we'll just dive into my tax return stuff. If we pop over here, so you might remember this kind of little section that I did when I did my very first tax video last year and talking about why I wasn't worried about it. And yeah, that assumption ended up being right. So this year I ended up getting a 4.2K refund that I should be getting sometime this week, hopefully. And again, that will all be fully invested into the account as usual. So with that, that was roughly a 224K AGI after all my salary deductions, dividends and all that. That's what it amounted to. So a big jump up from last year compared to the 180K I was at. But that's on a similar salary. So last year I was at roughly a 204K salary, and then this year was 205.3K. So that's basically my 179K plus 15% annual bonus, right? So yeah, all things considered, really happy with the result, honestly. So my refund's obviously a lot less compared to last year, so like a little less than 8K less. But yeah, so that 8K basically went to kind of paying the difference between the AGI here, right? So yeah, I think the big difference here is really just from the dividend income that I received since I went a lot harder with the high yield ETFs. So yeah, honestly, I'm really excited about it. I think this really cements that I can stick with this strategy long term, hopefully, provided I still have the side business income coming in, and I will, and can do kind of business deductions. So really that's where the YouTube comes in, right? That's why I'm kind of wanting to grow this as much as I can and kind of grow the income every month through the YouTube income, referral earnings, any potential future sponsorships if that comes through. I'm excited, honestly. It's great that got a 4.2K refund on 52K of extra income that I brought in from the high yield dividend ETFs last year, right? So, and yeah, I know some people have asked too, like, had I not had my side business deductions and only my mortgage, HELOC, and margin deductions, if I'd still get that refund, and obviously not. So I kind of ran just the scenario through ChatGPT just to kind of get a rough idea, and it estimates that maybe I would have owed 6K or so had I not had my business deductions, right? So, but all things considered, like, had I not had that, that's pretty good overall, like considering that like I'm paying 6K in taxes for 52K of income. That's pretty good. That's roughly like an effective 10% tax rate on my dividends, which is not bad at all things considered. So yeah, definitely that's just something to keep in mind. The side business stuff definitely helps a lot. It's potentially doable if you're okay with kind of paying a lot higher taxes with that. But yeah, again, everyone's tax situation is very different. Not tax advice, of course. You definitely consult with your own tax people. But yeah, in the end, I think like the discrepancy between ChatGPT's 1.5K refund estimate that it had last week and the final 4.2K refund result came from the fact that I forgot I had margin interest last year that carried over to this year. So I think I used like maybe half of that last year to deduct from some of my dividends. But yeah, that a large chunk of that kind of came through this year. So that, I think that was roughly like 4K. So like if we kind of go here, right, I had 6.8K of margin interest. So I think like basically 4K got added here essentially. Oops, sorry. No, I needed to do minus 4K. So there's closer to 10.8K of margin interest that was able to be used. So that deducted against this, I'm assuming, and then also the substitute payments, right? Non-dividend income, the ROC, that's 29% of my dividends that was tax deferred. So really excited about my tax return. Yeah, I'll be getting my refund later this week, and I'll probably make a little video about me investing that. So that'll be exciting. I think I'll be sticking with this strategy long term. I don't have to pivot to just doing growth to be more tax efficient. Yeah, I'm pretty stoked about it, honestly. Yeah, if you have any other questions about this, definitely drop comments in the section below. And also, as a quick note too, I did ask about the pro rata rule for my Roth IRA and doing the backdoor Roths. And as my tax person says, like I think I'm just gonna trust her at this point, but like she said that because I always kind of kept my rollover IRA into a separate account and I never actually mixed money between my pre-tax and my post-tax money, that's what kind of is okay in my case. She said like as long as if I do like a backdoor Roth transfer, I transfer it to like a traditional IRA account that doesn't ever have like pre-tax money, I should be okay. So I don't know, like I'm a bit mixed about it just because like what I read online seems different, but at the end of the day, she's a professional. So I think I'm just going to trust her there. So yeah, though this year, I'm not sure if I'm going to do a backdoor transfer again. I just want to kind of focus on my taxable, but it's nice that I can still do that given that I have my rollover IRA. But yeah, that's for my taxes. Yeah, if we dive into just my numbers for the regular portfolio update. So if we pop into Robinhood and see my live portfolio here, so you can kind of see all my positions here. It's all fully live portfolio, nothing hidden. My account amount has definitely dropped this week. One, bills came out and also it was kind of a rough week. So we'll break that all down. So Friday ended up in the green by 0.13%. Like the dividends that came in definitely helped this. And then overnight, it's looking like it might hopefully be good for tomorrow. We'll see. This was kind of like the overnight from Friday, and then the overnight from Sunday still needs to come in. I'm filming this on Sunday, the 22nd. But yeah, if we look at how the stuff went during the week, yeah, definitely a down week again. Started off strong. First couple of days was nice and in the green. Yeah, it was up all the way, like 2.6% at one point at 4K, and then things just started dropping again. So by the end of the week, I was down 2.65% or 4K. On the month, I'm still down 7.78% or 12.7K. On 3 months, down 19.3K or 11.35%, and year to date down 10.67% or 18K. So definitely been a rough start of the year with the war going on and everything. As I've mentioned, like January started off strong. I was actually outperforming the indexes for a while there, but then yeah, as stuff kind of started hitting and the war and all that, like that's definitely just kind of been dragging things down, right? And of course, like the margin amplification isn't helping there, so just getting hit a lot harder with those drops, sometimes by as much as 2-3 times. So yeah, but overall, probably like a lot less than I would have had I had my old portfolio set up, given how much I reduced the volatility. So yeah, not so bad in that case, right? My buying power sitting at 77.9K, and then we'll dive into all these numbers here in the portfolio. So yeah, let's check the top line numbers here. So altogether, if we add up all my assets in the portfolio, right, my gross value is sitting at 312K, a little above that. I'm using 163K of margin. So if you minus that out, that gives you your net value that we saw. So roughly the 149K. Then after, if we check the total return and unrealized gains and losses, so we're going to be basically looking at these numbers over here, right? If we look at the total return column, so this includes dividends, profits realized, and also the margin, right? So with all the total returns, and also just kind of dividends I've received from like sold positions and stuff that I've sold. So I'm just kind of putting this all in this one bucket here. So I'm up 29.1K or margin. With the margin, it's actually up 19.56%, just because I try to keep all these numbers in mind, but really like this is the total profit, right? This is like kind of what gets taken into account, for example, in Snowball, right? It's more total profit with everything included. And then also if we go off the unrealized gains plus some of those realized gains and losses, like I'm actually down minus 30.6K or 20.59%. So quite a bit there, given that all the positions that I've sold, right? So definitely a lot of dividends that are getting held over here for total return, but then there's a lot of those realized gains losses from that big rebalancing I did the other week. So yeah, depending on which column you look at, can be pretty or not. So overall, in the positive, given all the dividends received and everything, right? And if we look at like how that's split up between growth and high yield income, so 164.2K of that, roughly 52% is in growth. And then the high yield income side, 147.7K or 47.3% is in high yield income. So this is what's generating all the income every month. If we pop over to my margin health, you kind of see those similar numbers and how that sits for my margin overall. So my gross portfolio value that we talked about, the margin used, the net portfolio value. If we take the gross portfolio value and apply the blended margin maintenance here of 25%, because that's my margin maintenance across all my positions now, that gives you a margin maintenance dollar of 78,000 essentially, right? So my portfolio value of this or this really would have to drop to 78K for a margin call to be triggered. So that's roughly a 71K buffer right now. So really, if you look at the margin buffer on Robinhood, it's like roughly 47.65%. But again, I don't like looking at that personally because it makes you feel a lot safer than you are, because you're like, oh, a 47% drop's not going to happen, right? But really, what you need to look at is that your gross portfolio value, if that drops 22.76%, that's the equivalent of a 47% drop on your net portfolio value, right? Just because of the margin amplification. So I'm always kind of keeping an eye on this number here. So 22.76%, and then my equity is sitting at 47.76. So definitely a lot lower than 50%, as I've mentioned in the other week. Yeah, just because of the layoff, and then also that I'm still drawing from the portfolio as my income is coming in and just putting in a lot less income in the portfolio. But once I start my new job in a couple of weeks and get like that initial signing bonus and my full paychecks coming in every week, I think that will pop back up a lot faster, which will be nice. And we'll get back over that 50% mark where I want to be, right? And then with that, I have 77.9K of buying power, like I mentioned. And then if you half that, that's 38.9K of cash available for withdrawal. So this is like real cash I can take out of the portfolio if I wanted to, right? Yeah, potentially if I did that, right? Like I'd have to minus that out to 38.900. Yeah, you can kind of see that, like, despite that would be pretty tight on margin buffer, but technically it's doable, right? I can take up to this amount in margin total, right? So that would be really tight, more than I'd be comfortable with. But yeah, that's why I want to keep this buffer high generally, right? And as far as the margin buying power here, right? That's really just taking your margin total and then minusing your margin used, right? And that's where you get this number. And yeah, and then as far as the monthly income, I'm sitting at roughly 4.5K a month. So if you apply that to just the high yield assets, right, that's actually a 36.7 dividend distribution yield. If you go off the full portfolio value, it's actually closer to like 18.1%. So, but yeah, personally, I kind of like calculating both just to kind of get an idea of like, if I put money in, right, like how much dividends will actually come out of it. So that's the top line numbers there. If we pop over to Snowball and kind of see how stuff is looking there. So you have like the categories broken down a little bit better here. So for my high yield ETFs, for the single and ultra yielders, so that's sitting at 23% allocation. My target's eventually 17%. So all these are in the red, obviously, given that, yeah, they just pay a lot more in yield. So there's a lot more NAV erosion generally. You can kind of see like the capital gains are dragging things down despite the dividends. Same for Ulti. Chippy, this is a relatively brand new position, but got hit hard by like the war in Iran volatility, right? So dividends are coming in, but the capital gains are down quite a bit. And then BTCI. So probably in these two, like probably the only two I'll still contribute at this point is kind of Chippy and BTCI. For YMAX and Ulti, I'm just going to let those ride for now and just kind of collect their income. And yeah, on the anchors, that's still green, still holding on steady. So yeah, there's realized gains there. There's capital gains, but a lot of dividends received. So a lot of that is being led by XPay. So yeah, I have some capital gains there. That's kind of putting away with like the volatility in the last few weeks, but a lot of dividends, 6.7K. That's holding up in the green. MLPI is holding up good there in both capital gains and dividends. And then T-SPY, TDEX, SPY, QQI, they're all relatively new. So they're still in the red, and also kind of were affected quite a bit from like the volatility in the market the last few weeks, right? Then my hedge, so OR, IAUI, and CLSC are in here. So yeah, gold got hit really hard on Friday in particular with the goings on with the war. So this is for the first time in the red in a while, actually, because gold's been pretty in the green for a little bit, right? But yeah, you can kind of see this massive drop on Friday. Crazy, right? So it kind of wiped out a lot of the gains, and since I bought in, really, that's for gold. And yeah, and then I know there's people that are asking about XPay in general and like where I bought and things like that, specifically Kosi Dividend, who's messaged me a couple times. But you can kind of see exactly my buys here, right? So unfortunately, I didn't quite buy in the lows here of April. I bought kind of like on the upswing, like a big purchase here of like 36K back at the end of May, right before I switched to Robinhood essentially. And then I've kind of bought a little bit along the way. Did some buys like as it was kind of going down, and I'll probably buy a little bit more here given how much it's come down. But yeah, overall XPay definitely It's a 20% yielder, so it's almost kind of like controlled NAV erosion, given that the S&P 500 yields anywhere from 8 to 11% per year, depending on the time period, right? But I ended up buying at a good time, so still solidly in the green here for like 17.3%, which is nice between the capital gains and the dividends received. So yeah, overall, pretty happy with XPay, and yeah, all of its income is ROC as well too, which is nice. And yeah, that's XPay. So I'll still continue investing in that. I think it's still a solid core, despite that kind of slight erosion. But overall, like, yeah, obviously T-SPY, TDAX, SPY, QQI are the better options there as far as kind of countering NAV erosion and still having dividend and growth, right? And then, yeah, and then after for my anchor ETFs, as far on the growth side, VOO, VGT, SPMO, SCHD, those are all mostly in the green except for SPMO, which is fairly fresh, and VGT as well. But yeah, those will eventually bounce back, I'm sure. And yeah, that's for that. And if we pop over to the growth side of things and check like my favorite charts here. So yeah, if we isolate the week, right, from March 15th to March 21st, so you can kind of see that here, right? So as I mentioned, I was kind of like outperforming for a good chunk of the week there. It was actually up 3.2% versus the S&P was up 1.3% at one point. But yeah, as stuff dipped, you can kind of see the margin amplification there. And then, yeah, that big dip on Friday, which kind of affected things, right? So I ended up slightly lower than the S&P, 2.47% or 3.7K versus the S&P's 2.1% or 3.2K. So I think what it does here is that it assumes you invested at the same point as the S&P anytime you invest, and that's how they kind of try to compare performance there. And then if we go to my new favorite section here, the heat map, I can kind of see how the week did. So overall, very red, of course. So yeah, the ones kind of that were holding it down, Chippy did well, up 1.2% between its dividends and capital gains. Did good as kind of like one of the hedges. MLPI did good on the energy side, but everything else otherwise was kind of down. VOO was down, the QQQ was down. Interesting to see how like QQQ was down 2%, but TDAC and QQQI held up a little bit better because of its dividends received, right? So kind of that helps cushion the blow a little bit. Gold down quite a bit, as you can kind of see here, right? Big drop this week. But yeah, that's how it's looking as far as like the heat map, right? If we go year to date to kind of see, if we zoom out, HD still holding on strong at 11%, MLPI holding on strong, but everything else just kind of getting hit pretty hard by the war volatility there, right? Even gold now has dipped into the red with that big drop on Friday. But interestingly, yeah, you can kind of see QQQ minus 5.3%, but TDAC and QQQI holding up better with the income. So kind of nice to see as the income's coming in, right? Kind of helps buoy things. And then interestingly enough, you can kind of see that Alti's holding up well with its dividends received. It's holding up better than the NASDAQ and even VOO. Yeah, you can kind of see there, right? So yeah, Alti's strategy change seems to be working out relatively well. I've been happy with it. So maybe every now and then might throw a little bit back into there, but not as crazy as I was going last year, right? As I said, I'll be focusing on TDAC, T-SPY, QQQI, SPY this year, XPay. And then if we pop over to the dividend calendar from last week. So that was a nice big week. I made a little over $1,000 in income. So had like the monthly TDAC income that came in at $167 or 17%. Chippy came in at $240 and 35%. Alti came in at $211 and 67%. YMAX at $128 and 53%. BTCI came in at $212 and 28%. IAUI at $15 and 13%. MLPI at $62 and 14%. QQQI at $101 and 14%. And SPY $21 at 12%. So yeah, good week. Should have another good week this week. Not as strong, but some of the quarterly dividends here are dropping for my growth funds. And then we'll be rolling that up with SCHD and VOO at the end of the month there. So overall, it's trending to be roughly 4.4K monthly dividend this month. If we look at how it's looking on the yield on cost side of things, we can kind of see here, we can kind of see like all the dividends and as it's come up. So it's going to be higher than last month, which is nice. And kind of see compared to that the same time last year. So kind of outperforming. I think I'll have a more trouble outperforming in the later part of the year, but we'll see. But yeah, Alti's dividend last week was 67%, but the yield on cost for what I have invested into it is actually 42%. YMAX was for 53%, but is actually 32% with all I have invested into it. Chippy, 35% or 33%. BTCI was 28%, but with all I have invested into it and how much it's gone down, it's 16.93%. XPay holding on strong at 23% stable. TDAC holding on as well, just slightly lower at 16.69%. T-SPY slightly lower at 14%. MLPI slightly higher at 14.9%. QQQI slightly lower at 13.76%. And yeah, IUI 12.8% and SPY 11.8%. So yeah, you can kind of see the yield on cost there. Overall, you want to kind of see this kind of slowly decline, not have like crazy big swings. Like that's why like Ulti kind of got cut a lot, BTCI, YMAX and stuff like that. So trying to ideally getting it in this range, right? From XPay, TDAC, T-SPY, MLPI, QQQI, SPY, and all that. This is kind of what you want to see generally, kind of having it stay relatively stable, right? That's pretty much the portfolio update there. If we pop over back to the Miro and kind of go back to what we were talking about on Saturday's video, that's the big update for the portfolio, right? As I mentioned in this past Saturday's video where I announced the new job I found, I'm really considering evolving the strategy after having gone through this layoff experience. Like once I start the new job, I'll almost exclusively be investing in safer high yield ETFs going forward to constantly be growing my cash flow every month. Even more so than I was doing before, because before I was doing like a 60-40 split, right? 60% high yield ETFs and 40% growth. So now I'll be kind of more like almost like 95% high yield ETFs and like 5% growth. Like the only growth stuff that will happen will be from my monthly rent for that $500 that comes in, I'll put into VU or whatnot. And then also any dividends that come in from like SEHD, QQQ, VU and all that I'll kind of keep reinvesting into the growth stuff. But yeah, so then also more aggressively too, I'll also be reinvesting all my dividends into cash flowing assets and high yield ETFs such as T-SPY, TDAC, QQI, SPY, XPay. So all those will keep reinvesting into the portfolio. Previously, I was kind of depositing those to cash and to the margin balance to kind of help keep that under control. But yeah, I'm thinking I just need to go a little bit more aggressive here to really kind of just start upping the cash flow month to month and just kind of get my salary replaced as quickly as possible at this point. Like I mentioned, if a layoff happens again in a few years or in a year, who knows? It's hard to say with the industry being as volatile as it is right now. Ideally, I want to be in a point where like my full net salary is replaced at a minimum. And yeah, I don't have to rely on unemployment income. Like that's just a bonus if I get that, right? Just because we kind of saw the issues that I ran into with the unemployment stuff, right? I don't want that to happen again and have that stress. So it's kind of really just cemented the fact that I need to kind of push this early retirement as hard as I can and as fast as I can, given the current state of the industry. So I think that really the last thing I need to do before I really pull that trigger is just run some projections. So I'll kind of take all my latest numbers from my new salary and all that and run some projections on some of those sheets that you've seen before and kind of see where roughly that will kind of put me. I'll do that in the next couple of weeks and definitely share a video on that for sure, just to kind of get a rough idea of what I'm getting myself into. And then as far as the finance video of the week, so this video is already kind of going a little bit long, but none this week because honestly it was a really busy week interviewing, and yeah, you can kind of see like with the new job stuff, right? And basically had like these 2 interviews happening simultaneously last week for my final ones. So I really didn't have time to listen to as many YouTube videos as usual. So some of my walks was more focused on kind of prepping for the interview in my head and going through talking points and stuff. So that'll be back next week. That's the update for this week for week 43. As usual, if you want to follow me off YouTube, there's a bunch of different ways of doing it. You can do it on Blossom Social here. You'll see all my posts, all my trades coming in for across all my portfolios, actually. So across my individual, my Roth IRA, my traditional IRA. So a great way to follow that. It's a little bit less transparent because they just kind of keep it to percentages, but Snowball, you'll get like all those same numbers that I was showing you from the dividends to the growth and all that. You can kind of poke around and see exactly what's happening with the portfolio. And yeah, nothing's hidden, of course, as usual. And yeah, you can even see my transactions and stuff like that as far as like what I bought, any fees. This was my margin interest that came in, right? So you get to see all that good stuff. Patreon, of course, I finally caught up to the backlog. I uploaded everything over the last couple of days. But this is just there in case there's any shenanigans with YouTube again. There's a backup. There's also a little membership option if you want to support the channel a little extra. It's really just, you'll get like a Discord badge and things like that. It's mostly just think of it as like a monthly tip jar in a way. No extra perks as far as like extra videos. I just want to keep everything free and not paywalled for people. So this is just really as extra little support for the channel. And then of course there's the Discord. Yeah, love talking to people in between videos here. You get all my trade alerts for everything. So ahead of the videos if you care about that. And yeah, a lot of people talking about how they're living out of their brokerage as well too. Other YouTubers sharing their videos. So lots of different ways you can kind of really pick up on different strategies from people and really pick and choose what you want for your own, right? Because there's no one end all be all strategy, no matter what some other people say, right? Everyone's financial situation is different and everyone's goals are different. I highly encourage people to seek out a lot of different YouTubers. That's the video. If you want to follow along and appreciate all the transparency that I'm giving week to week across my layoff, across my portfolio, please give a like and subscribe, and yeah, hit the bell notification if you want to be notified about future videos. And I'll catch you in the next video. The next video will probably be dropping tomorrow, and that'll be my full paycheck investing for my unemployment check this week. And then probably likely after that, whenever I get my tax refund this week, I'll probably be investing that, making another video. So catch you then, and have a good rest of the week. Peace.